What's going on, everybody, and welcome back to the channel. So today I'm going to be talking about Fubo TV stock and why I am super bullish on this and why I actually started buying earlier this week. Now, this is the second time that I am recording this video because when I first recorded it on Tuesday after I started my position at about $27 a share, this stock has gone up more than 40% in just 3 trading days. So obviously a lot has changed, especially when it comes to the valuation, and that was actually the main focus of my first video because at the time at $27 a share, I believed Fubo was grossly undervalued. Those were the exact words I used. But what I want to talk about now is the new valuation and why I still believe that this stock is seriously undervalued, especially when you look at competitors. All right, so I know what you guys are wondering, what's the format for the video? So in part one, we're gonna be talking about the recent stock performance and the new valuation metrics. Then we're gonna get into the business model, what they do and what they focus on. Then we'll get into the most recent quarterly results. And finally, we'll be ending it with some of the growth opportunities that I see and what I think will be the biggest growth drivers going into 2021. And real quick, before we get into part one of the video, I want to let you guys know that I recently did a full makeover of the Discord chat. So there's specific stocks, there's lessons learned, suggestions, and really just a community of investors where we can talk about different stocks out there and learn from each other. So if you guys want to be a part of that community, be sure to check out the pinned comment down below. It's still pretty small, but it's a start and I want to grow it with you guys, so be sure to check it out. So now that I got through everything I needed to, let's get right into part one. So recently I have been so mad at myself because I'm actually in a group chat with some buddies and they were all hyping up Fubo stock back when it was $10 a share. Now, of course, me being me, I completely ignored it and I missed out on a ton of gains, but I'm gonna get into why I started a position and why I'm still bullish on them. So as you can see, they are now up just about 250% since they went public back on October 8th. Now, after a recent pullback to $27 a share, I went ahead and started my position. And like I mentioned at the beginning of the video, this was as I finished recording my first version of this video because I just knew at the time that it was too undervalued and that I had to get in. Now, of course, I wasn't expecting the stock to move up 40% the next 3 days after I bought. But what I want to get into now is the valuation because as you're going to see, this stock is still undervalued, so try to stay with me. Fubo is trading at about $37 a share, giving them a $2.6 billion market cap. Analysts have them doing $244 million in revenue this year, which would give them a current price to sales of 10. Now, Fubo is expecting 2021 revenue to increase by 75% to $425 million, so they would theoretically have a forward price to sales of just 6.1. And now for the fun part.
But wait! There's more!
If we compare this to Roku, they have a current price of sales of 26, with analysts expecting revenue to grow by 37% in 2021. So Fubo has double the growth expected and less than half the price to sales of Roku. Now, if we compare Fubo to Netflix, they have a price to sales of 9.8, which granted is slightly less than Fubo, but analysts have Netflix growing revenue by just 18% in 2021. Meanwhile, Fubo is expected to grow by 75%. So Fubo is trading at a significantly lower valuation when you look at the price to sales, which tells me that Wall Street is overlooking this growth beast. So that's really what the updated valuation metrics look like. And I don't know about you guys, but find me another company that's growing revenues by 75% and only has a forward price to sales of 10, because that's pretty unheard of, especially given the crazy valuations that growth stocks are trading at. So now let's get into the actual business model so we can see what future growth catalysts are coming down the line. But first, if you want 2 free stocks and you live in Australia, I'm just kidding. Really though, if you guys feel like you're getting some value from this video, I really do appreciate all the support, and you can do that by liking the video because that shows me that you guys like my content and it also helps push my videos out to new viewers. So I appreciate all of you guys that are in the thumbs up squad. Now let's get into it. Alright, so at its core, Fubo TV is a live streaming platform that primarily focuses on live sports but does have other networks under their platform like FX, ABC, MTV, and many others. Now, by having dozens of networks under one streaming service, this allows them to create packages that cater to each customer's needs. If you want a sports-only package, there's an option for you. You just want entertainment, there's a package for that. If you just want to stay up to date with current news, they got you covered. So that's really their core business. Now, there are some other parts of the business that are still being developed, like a sports betting feature, which I will cover in the growth opportunities because this definitely has potential to add billions of dollars in market cap value alone. So now that you understand what Fubo does at a high level, let's take a look at some of the highlights from their third quarter results. Alright, so Q3 was a record quarter for Fubo as they saw record increases in not only revenue, but the number of subscriptions. And this growth was really driven by pretty much everybody around the world having to work and spend most of their time at home. So diving into last quarter results, the number of subscriptions grew 58% year over year, growing from 290,000 to 455,000. Now this correlated directly to the number of total content hours streamed, which was 133 million hours, or an increase of 83%. So from a high level overview, they saw really strong growth over Q3, but when you dive deeper into the numbers, it gets even better. Subscription-based revenue increased 64% year over year to 53 million, while advertising revenue increased a staggering 153% to $7.5 million. So this brought total Q3 revenue to $60 million, which is a ridiculous increase from the $5 million they did in Q3 of 2019. Now, the reason I like Fubo so much is because they essentially have the best of both worlds. They have their subscription model for live viewing, which is recurring revenue. And as you know, I love me some recurring revenue because it's consistent and predictable. But they do also have ad-based revenue, which, as we all know, is a massive industry. Just look at Facebook and the $80 billion of revenue they've made over the last 12 months. Now, I'm not saying that Fubo is gonna all of a sudden in 10 years be making $80 billion in ad revenue because that's just unrealistic. But what I can see is them doing a lot more than $7 million in revenue, let's be honest. So from a revenue standpoint, they showed incredibly strong growth, but there are some downsides to the financials, and that comes in the form of the net loss and the balance sheet because both of these need some work. So digging deeper into the net loss, the metric that really jumps out at me, other than the $300 million operating loss, is the subscriber related expenses, or as I understand it, the cost of keeping a subscriber. Now, the reason this stands out to me is because it was actually just slightly higher than total revenue, which tells me that it actually costs them more to acquire and keep new customers than the revenue they get from them. Now, obviously, this needs to improve because you won't be in business for long when you're stuck in this vicious cycle of spending more on customer acquisition than you actually get in revenue from them. Now, as for the operating loss, the reason it's so much higher than last year is because they recently merged with a company called FaceBank, and this resulted in a one-time expense of roughly $200 million, which is about 2/3 of that operating loss. Now, when you get all the way down to the bottom line, they took a net loss of about $275 million. But if you want to exclude the $200 million in one-time expenses, then they, in theory, had a net loss of about $75 million, which, don't get me wrong, isn't great, but it could definitely be worse. Now, I won't spend too much time on the balance sheet, but basically, they have about $250 million in cash after raising $197 million from their IPO. Now, personally, I think they should have raised more money because they have current liabilities of $250 million, and this means they essentially have a current ratio of 1, which is most definitely not ideal. I personally always like to see a 2.0 or at the very least a 1.5 because this gives them a little bit of breathing room, but having a 1.0 is just living life too close to the edge for me, so definitely something to take note of when you do your own due diligence on them. So now that we've gone through all of the basics, let's get into what I believe are some of the big growth drivers that are going to push them through 2021. So the first and most important thing to talk about when it comes to Fubo is the return of sports. One of the big reasons people turn to Fubo is because of the all-in-one package that you get with a subscription. Most people these days, they have their Netflix and their Hulu subscriptions, maybe even some Disney Plus. But if you want sports, there's no real main player for this. So with Fubo, you get access to 90% of the nationwide NFL games, 100% of the NHL games, 88% of MLB games, and 70% of the NBA games. So for any avid sports fan, Fubo TV is a must. Now this brings me directly to my next couple points. 2021 is going to be the year that 2021 is the year that sports returns back in full force, and with sports comes sports betting. And if you guys have watched any of my other videos on DraftKings, which I'll put a link to up top over here, then you'll know that I am super bullish on this industry, especially as more and more states begin to pass legalization. Now, the online sports wagering market is expected to reach $155 billion by 2024, and I think at this point we all know who the big two players are, and that's DraftKings and FanDuel. But this doesn't mean that someone like Fubo TV can't be a player. The reason I say this is because a massive part of Fubo's customer base are avid sports fans, and those same sports fans that are paying for a subscription are probably more than likely to also want to bet on the games that they're watching. So for Fubo, this is perfect because now you have a platform where they can watch the sports, and you also have integrated sports betting so they can watch it live as it's happening. Now, another reason why this is also massive is because DraftKings is valued at $20 billion. So if this vertical can become just 5% the size of them, that would add another $1 billion of market cap value alone. So definitely some real potential to be a massive growth driver for them heading into the future. So to keep this video from dragging on and being too long, I really just wanted to focus on that main growth driver because let's be honest, that is massive for this company. That is just a big market that now they are entering and can become a legitimate player in. So moving into 2021, I believe that'll be the biggest growth driver, and that's what I'm going to be watching closely to see kind of how they develop it, how it rolls out, and how it integrates into their existing platform. So I hope you guys enjoyed today's video, and if you did, be sure to drop a like and also subscribe to the channel because there is a ton of content coming. And if you guys aren't already in the Discord chat, be sure to check that out in the pinned comment. So with that being said, guys, thank you for watching, stay safe, and I will catch you guys on the next one.